$1 trillion, of course, is now the new mark, and that is for Bitcoin in terms of its market cap. Today, we'll be running down all of that. What's happening with Bitcoin flying close to 52K, and also break into some very interesting comments from Gary Gensler. You don't want to miss it. My name is Paul Barron. Welcome back into Tech Path. Let's get started today. iTrust Capital. This is one of the places you guys can go for a long-term hold in a crypto IRA, self-directed, so it's very easy to manage. One of the things that you do not pay is fees in the sense of monthly fees. All you have to do is go in, sign up, use our link down below, and you pay basically for your trades and that you're conducting within your own account. Get into altcoins, get into Bitcoin, go into ETH, even gold and silver. All of that available in iTrust. So make sure and just use our link down below for a $100 funding reward if you decide to go that direction. A couple of things have happened today. Bitcoin market cap reclaims $1 trillion. Hasn't seen this in a while. Now with Bitcoin moving very fast from around 48K to a fast overnight of closing in on 52K. A lot of things have happened, I think, that are contributing to that, but I think the real factor here is whether or not the crypto markets have actually decoupled from the financial markets, because we do know what we're facing from a financial standpoint. As it rallies right now above 51K, closing in on 52, we've got a few things that are of note here. 130 million in cryptocurrency short positions were liquidated. So a lot of people who were shorting, that didn't work out so well. The entire cryptocurrency market cap rebounded above 2 trillion. That's overall when you look at all the market as a whole, and 3% in the last 24 hours. That's significant in the sense of what we've seen with Bitcoin. One thing to look at, and we do these videos on our market sentiment index, is when we were looking at our market sentiment data on Bitcoin and Ethereum, they were printing lower highs. We were seeing this little bit of a stair step going up and down, but the key is lower highs going to the future. So is this a long-term play, or is this a position right now where the market could get a retracement? That's the caution I think that everybody has right now. And I know a lot of people are really in that position right now of looking at a short on Bitcoin. So it's going to be an interesting market to see it play out. Here's a video I wanted to go into because this is talking about the Fed, how they're going to react, because a lot of this is still indicative of what's been happening with the Fed. The FOMC meeting that we aired here on this channel was, in my opinion, a good highlight in the sense that maybe it is finally one of those scenarios where we've got the market separating. Listen to what they had to say on the CPI.
Fast. But on a historical basis, are we at would you call this a high level of interest rates?
Well, no, on a historical basis, this is not a high level of interest rates. Having said all of that, we have a couple of things working.
Right? If you go back far, like the early 20th century and stuff. But given what we saw from the 60s to the, or 70s to the current period, I think of 6, 7, 8% is not crazy for the long rates.
Oh, I think that's absolutely correct. We've been through an unusual period of very, very low rates. We are now normalizing. The other issue that is certainly very uncertain is the so-called neutral rate. So the Fed thinks it's probably in restrictive territory, but there's a debate that says, the data thus far suggests maybe, it's not as restrictive as they think, which explains why it is that we're seeing surprises, positive surprises in the labor market, positive surprises in GDP growth.
All right, so a couple of things he hits on there, which is intriguing because it does have some relevancy here to the crypto markets, is whether or not these high rates, currently around 5%, obviously we've seen the performance of the markets continue to fly. The question is this the new standard? And if it is, then the opportunities, I think, have started to validate against de-dollarization, all sorts of things, which is why I think we're seeing a little bit of a decoupling in the crypto markets finally. Even though Bitcoin has started to move somewhat in alignment with the S&P, it's not necessarily lockstep like it has been in the past cycles. So very interesting things happen right now on a macro standpoint, of what this might look like over the next few months and weeks going into the summer and definitely into the next halving. Bitcoin ETF inflows pick up again, with BlackRock leading the way. Couple of points right here. BlackRock saw its largest net inflow on Tuesday, more than a month after launching. And remember, this was when we saw Bitcoin under 50K. iShares Bitcoin Trust IBIT brought in $493 million during the trading day, according to BitMEX, and the funds broke the previous day's net inflow high mark of $386 million. So a pretty significant, not broke it, just smashed it. So just 7% of ETFs are as big as BlackRock's fund overall. Here was Eric Balchunas talking about IBIT popping off there. Again, this is all signaling what? That we're getting a lot more institutional capital coming in. We're seeing a ramp up into the halvening, and we're seeing conditions possibly from a macro standpoint positioning positively. Sometimes too many good things. I always worry about that because I look at that and I say, is there a hidden gray swan here that could cause some adjustment in the market? I want to go over to Gensler's clips. There's a couple that we have. This one is talking about really whether or not they're going to and why they were so reluctant in actually approving these ETFs. Listen in.
It almost was, we called it grudgingly. When you finally got it from the court case sort of forced in. Is it really just neutral, or wasn't there a little bit of a, we're not sure about this thing, and buyer beware?
Let me say it this way. Yeah. We're merit neutral if somebody's complying with the laws.
Okay.
So if they're giving full, fair, and truthful disclosures to the American public, who gets to decide on their investments.
But okay? You're so smart. You're at MIT, and people listen to your what you think about Bitcoin, and it is troublesome to me if I look at it and I see all the merits of it, and someone that taught about it and understands it seems to have an opinion that maybe it's, I don't know, pet rockish or something.
I get your words about pet rocks and so forth. So here we have an asset class, all of these 15, 20,000 crypto tokens.
Yep.
Many of which, without prejudging anyone, many of which are actually something called investment contracts or securities, and the platforms upon which you trade, the intermediaries. Right. They're not like in this building, NASDAQ, that has protections and against fraud, manipulation, and the like.
Just seen people lose their shirt on with NASDAQ stocks.
You can lose because there's risk. Right. There's risk in investments. But what we try to do as a society is take some of the fraud and manipulation risk out of the markets by regulation.
Is that the problem, though? It's not necessarily Bitcoin, the underlying asset, but more the froth and the potential for fraudsters to use it that has been
this is a field, Becky, that's been rife with fraud and manipulation.
So as we know, this has kind of been the narrative from the SEC for quite some time, rife with fraud. I think rife with fraud, meaning the markets from the crypto side of things. This is just something that we continue to see in all financial markets, and especially when you think about what's happening even with the S&P, much less what we've seen in the greater markets around investments and securities. And I think this is just one of those things where he's struggling with this because of, let's just call it, special interests that do dictate to the SEC. Here's another clip that talks about Bitcoin and if it's decentralized. Listen in.
We get paid in dollars or yen or euro, and you have a whole central bank and support for one currency generally per economic region. That we don't have here. So there's a very real economic difference.
Which is part of the attraction, since it's decentralizized, and you can't have a profligate central bank.
It's not that decentralized, Joe.
Well, I know you're saying because of the ETFs, but really
no,
it is.
No,
for
it's not
DeFi
that decentralized
and everything.
Because look how finance tends towards centralization since antiquity.
Right.
So what do we have? We have a handful of 3 to 6 core so-called crypto
I understand,
exchanges.
but the asset itself, the way that the distributed ledger, right? That's how the ledger. And
now, how many times do you have people on this show that say, "I want to invest in something because how the books and records are kept"? I mean, Joe, really? It's just an accounting ledger.
So I think the point he's trying to get is the centralization. Now, granted, there are some pundits out there that would agree with that, but you're still looking at the option of holding your own tokens. And I think that's the difference here versus what we see in the securities market, which is true centralization into exchanges, into trading houses, into what we've seen in terms of institutional capital. All of that in alignment with where Bitcoin is a little bit of a different breed. One thing he did say, and they got into, was the ETH ETF and when that might happen. Listen to what he had to say.
And really, if Ethereum is a security, how does that analysis differ from how you would think about Bitcoin?
What we did in January was cabin to one set of filings. We have other filings. You're absolutely right in front of us, but I'm not going to prejudge it for you or the audience. That's something that a 5-member commission.
If we're all sitting here at this table together a year from now, that this dozen or so approved ETFs, that there's only like 2 or 3, gets even more concentrated, or do you think that there's going to be dozens of these things?
That's really up to the market to decide. But what you saw when this happened is fees came down dramatically. There was a bit of a investors benefited because there was a bit of a competition there. Investors also benefited from better disclosure because they have to do things called registering with the Securities and Exchange Commission on those products. And investors got the benefit of any surveillance by the various stock exchanges.
All right, so ironic that he's talking about fees, lowering fees. That's good for the market. And he also made another key statement there. The markets would assess this, meaning the likelihood of seeing other ETFs hitting the market would be a reality because the markets kind of pushed their way into a Bitcoin ETF. And if you think about where we were and where the SEC was prior to all of this, and also in alignment with what Bitcoin is doing today at 52K, holding that position right before and really before a halvening to see this kind of market volatility, I think this is the big indicator that is the differentiator in the market versus the last bull run. Simply put, we have institutions really playing now in the game. So it's going to be interesting to see how this plays out because the charts are starting to look a little different than they did in the last bull run. Here is Jacob Campfield talking about the very same thing that Gensler was kind of trying to avoid here, and that is see what's happening in Bitcoin after the ETF. That's what's going to happen to ETH, so don't fade it. Obviously, that's a big deal. We talk about ETH quite a bit here on the channel. This is going to happen with Ethereum, and most likely we are going to see some very similar results, but I think it's a different animal in the sense of what it could affect going forward in terms of the projects, the amount of transactions, and what we'll see in terms of the future of that tech versus what we've seen with Bitcoin, which is more of a digital gold, especially on the ETF side. So that in itself will be intriguing. And I think BlackRock, along with others, they're ready. They're ready because they see what's happening. These inflows are real and happening in a big way. All right, so let's go to another clip here. This is them basically CNBC Squawk Box kind of wrapping up with Gensler. He got a little bit sideways on his assessment of what's happening in the markets related to AI and crypto. Listen to what he had to say.
AI is a tool, but when you use that tool to do bad things...
Oh, my God. Now, the AI, it's okay for AI, but not Bitcoin.
Well, how do you see them?
No, I'm just saying you'd say it's a tool, but if you use it to do nefarious things, then then you're saying it's not AI's fault. Well, it's the same case. You just made the same case for Bitcoin.
With Bitcoin's a non-security, but if
now you're splitting hairs again.
No, I'm not, Joe.
And for every Jamie Dimon, I can raise you one Paul Tudor Jones, one Larry Fink, one Stan Druckenmiller, one. I mean, I'll raise you all. Peter Thiel, Mark Andreessen.
They don't run the SEC.
Well, they don't run the SEC, and it's clear that they don't know how to assess new technology as we start to see the very same thing of these nefarious actors are going to happen with all technology moving forward. So you can't use that base case when it comes to crypto as a whole. Now, there is some things happening in the market right now that you need to be aware of. And this, I think, has maybe a potential to push us into regulation a lot faster. If you go over to CoinMarketCap and, just take a quick look at 24-hour volume right here. We'll go and resort that. Here's the 24-hour volume. And as you'll notice, there's 3 tokens right there at the top that are recognizable: Tether, Bitcoin, Ethereum, USDC, right? Right underneath that is First Digital. First Digital is essentially the Hong Kong stablecoin. And this right here, when you look at the growth in what we're seeing just in First Digital, ranking in the top 4 in a global stablecoin, this is going to put a lot of pressure, I think, on DC to get this done quickly. In essence of getting some stablecoin regulation. Once we get stablecoin regulation, I think the market's already off to the races. I think we will see traditional capital start to move into, instead of that 1% position of trillions, 6 to 7 trillion sitting on the sidelines, could that end up being the 2, 3, or 4% position as we start to see major market moves. So this is one to watch for sure. Further into the news is, of course, Citibank testing tokenization of private equity. This, of course, is being done on Avalanche. A couple of points they made in the article. They joined the subnet, latest bet from Wall Street giant, looking to dive in further into use cases of blockchain adoption. That's a good thing. This is an additional test than what we've seen already on subnets by fintech firms. And of course, right here, the newest test CITI included end-to-end token transfers, secondary transfer to enable trading and validating on new capabilities through collateralized lending. All of those meaning good things for Avalanche, also good things for crypto and tokenized securities, real-world assets as a whole going forward. We're going to try to get a video for you guys on that because I think this is going to be a big factor going forward. Just wrapping up here, we'll go over and take a look at the charts on Bitcoin holding at 51.4, sliding off that top. I'm on the hourly right now, just taking a look, sliding off that top of 51.9. Couldn't quite crack the 52K. This 51 may be the window that we need to be watching. And ETH, of course, holding around the $2,700 to $2,800 mark right now after that big aggressive move yesterday and today. All right, we're going to try to get to you guys. We've got a lot more to cover this week, lots of news, and definitely a lot of insights. So make sure and subscribe to the channel right now. Just take some time, hit that subscribe button. It does help get us in your feed, but more importantly, it helps others start to understand really what's happening in the market. Make sure and catch me out there on X, @Paul Barron. We'll catch you next time right here on TechPath.